Hey traders, what's going on? Jamie Saettele here with the Power Hour in FX, in indices, in several commodities, and also here to take some questions. So again, Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk, and let's get started. So if you are new to the Power Hour, what we typically start with is US dollar, the FXCM Dow Jones US dollar index, right? This is kind of my, if I'm going to make an analogy with the solar system, this is kind of the sun with which everything else revolves around, right? Markets are not always able to fit into a perfect little narrative, of course. However, generally speaking, stronger dollar tends to be a headwind for things priced in dollars, and does pretty much every asset class having a sense of the dollar direction, right? Higher, lower, support, resistance does tend to aid in understanding other asset classes. So we are at a pretty important juncture. Obviously, several into resistance here, and if you are new to the segment, to the Power Hour here, let me explain what this is that we're looking at. US dollar, this is not DXY, this is the FXCM Dow Jones Dollar Index, which unlike DXY, which is 57% euro and very heavily based towards Europe, I believe you have, maybe 11 or so percent British pounds in there. You've got some Swedish krona. Essentially, that's a European dollar index. What we have here is 25% each of euro, pound, Australian dollar, and Japanese yen. So with that, we have a broader view. Essentially, it's the four most traded currencies against the US dollar. So it's a little more equally weighted around the world. And it charts extremely well. So this is a Pitchfork. Okay, this is a longer term fork. We're going back to 2000 and the 2017 high. We're using the low from 2018 and then the high from 2020. Let's call it the COVID panic high in the dollar, right? Remember, this is a very important level. This is where, again, the dollar spiked higher. And if you were to look at pretty much a chart of any index around the world, equity index or commodity or Bitcoin for that matter, you would see that they all made lows within a couple days of each other in March of 2020. Okay, so we have this Pitchfork. This thick black line is our center line with which everything else revolves around. And with that, we have parallels on either side of it. And this highlights an important and useful concept of symmetry around median lines. So the idea being that there's a balance, right? A balance in life, in nature, in markets, and the market tends to exhibit reactions or pivots levels that are equidistant or symmetrical, right, to the median line. So you can see that on display here in US dollar. So, once we hit the center line, which was back in August of last year, so about a year ago, we hit bounce. We found a resistance at this level. We found a resistance at this level, right? Same level. Now, at this point, we don't know, right, that this line exists. Once we establish resistance, then we establish it again. Okay. We get to the median line. Then at that point, I'm saying, well, due to symmetry, okay, we should be expecting to see support on the opposite side, equidistant from the center line that we saw, right, above the median line where we saw resistance. Well, sure enough, we did that. In fact, we did it twice. Well, guess what? Supported. Now we're back at the median line. Essentially, what I'm getting at is all of the important pivots, support, resistance, etc. are occurring on these levels. So it's just a range, right? Rather than being a range where you have a horizontal range, right? Where the market's like this, not a great artist, the market is on more of a trending range. It is a downtrend range, right? So you're like this. This is why median line analysis is so useful. So you can have various support resistance identified, right? It can be on different slopes, right? A steeper trend is going to have a steeper angle, of course, and vice versa. So this is why median line is my favorite tool to use that encompasses pitchforks, channels, etc. All right. Okay, so with all that said, here we are at this critical level in US dollar yet again. So we've been on top of this, you know, in the daily posts that I send out, and essentially we're, you know, kind of at what I would, you know, determine a pretty big point here. I've got, you know, personally, I've got some dollar longs and shorts on at this point, and we'll go through that here as I move forward with the various crosses. But, you know, my belief, and this is based on nothing more than just kind of looking at the various, you know, crosses and trying to fit that together, as well as gold and silver for that matter, but is that eventually we're going to break through this. And, you know, the big level of resistance, I think, is going to be up around this 12,100 level. And you can kind of see here, you know, why I would think that. So that's that spike low from March, okay, of 2020. You've got resistance here. I would call this an Elliott wave. We would call this a fourth wave high, right? And typically the market will retrace back to that fourth wave level to complete a correction. You've also got the 38.2 retrace of the entire move down. And I think there's actually another fib relationship up here. So if I were to do a 1618, so that's 100, right? Two equal legs is up here. 1618 is right there too. So actually that's 50% level, so I lied. Anyway, this is the big level I'm eventually thinking the market gets to. I like to call those magnet levels, right? You have all these levels that cluster, you know, highs, lows, fibs, etc. Just look across the chart. You've actually got more over here too. So you can see this high here, 2017, right? Low from Feb 2019. So we've got a lot going on there. Okay, and that's where we're at. Now this is where a lot of people, what I just did, I kind of went against my own rule or guideline, if you will. I just was talking about levels where I think the market could be headed, and that in its very essence is kind of, you know, being predictive in nature, which I don't like to do. So rather than saying where I think the market is going to eventually end up at a bigger pivot, why don't I sit here and say what's actually happening, right? And what has happened. So yesterday we traded into resistance and we reversed lower. Okay, that's not bullish. It's not bullish until we get over this level, right? So until that happens, I am neutral to even slightly bearish the dollar, right? And that would be reflected in my positioning. If we do pull off a little more, the question to me is really how shallow is the pullback? Like, was yesterday the pullback? Is that it? Or are we going to pull back a little more? Again, I think we do pull back a little more. 11,900 is where I'm looking for a first support. That is one, it's a 618 actually of this. Let's see if I can pull that up. 618. There you go. Okay. It's also the high from here, June 18th. It's also, by the way, what I call daily reversal support. And that is take the low day close, especially if it's a reversal day close, and just plot a line right across. Okay. All right. So that was a detailed explanation on US dollar. Now let's move to the crosses. There are some good questions coming in here. Jamie, as usual, Bitcoin, oil, gold, and silver, please. I will certainly follow or cover all of those. Mohammed is asking about gold as well. Also explain the drop. And what, I guess you're asking why on Sunday it dropped so much. Yeah, so I will get to that when I go through gold. All right, let's move to euro. All right, so euro, little reversal day yesterday. Low yesterday was, I believe, maybe a tick or two above that low from March 31st. We're going to keep this real simple here. So, one, trading at a low, right? Two, you've got a series of lows below here, which is about 116. Okay. Also, by the way, if I were to draw in a little measurement, a measured move here, and throw two equal legs down, guess what that is? Also about 116. So 116 looms as the really big spot. You know, again, we just looked at that US dollar chart, and the question was how deep a pullback, right? Well, I'm thinking it's relatively shallow. And one reason for that is actually this euro chart. So if we get a bit of a bounce, 118 lines up is a pretty good level for resistance because that's the underside of this trend line, right? That's the line off the November. That's actually the election day, I believe. Election day low, right? March low. Suppose you could draw it like this, actually, which would probably be a little more appropriate considering maybe as I say, this is the right line, right? This is the line that the market drew. I didn't draw it, the market drew it. Or is it this line? That's like pretty much the same thing. What I'm going to do is I'm actually going to put both of these in here. So we're going to put this one in as like in gray, like it's like fake. All right, so basically looking for a bounce. Let's say that's between 1770 and 18, right? And then we're going to get to, you know, that 16 level. So this is a pretty good example of what I call a magnet level. That 116, 1610, you know, all the lows, right? September 2020, November 2020, again, the election day spike on the downside. Channel, right? And a median line. So this is also a great little teaching moment here. All right, so this is a really good way to do this because this hasn't happened yet. And so you can really follow along with how I'm looking at markets. All right, so here we have a median line structure, pitchfork drawn, okay? We haven't hit the median line yet, right? Throughout this entire time, we've been waiting, right, for the center line to get hit. Now we have these midpoint lines, or the 25 line and 75 line that I call them. But notice that they don't really do a whole lot either, right? There's like one touch. So what we want to do is we want to draw in parallels that the market responds to. So I'm on log scale here. So we need the angle. That's 31 degrees. That's 31 degrees there. There you go. That's what we want. That's about right. So you can see the touch here and the touch here. Keep an eye on this median line. This is also why this 116 level is so big. So my thinking here, and this is all trading is about, at least in my opinion, is points of reference, right? No one knows what's going to happen next. Okay. However, you can put yourself in, favorable reward to risk situations in order to make money. And these points of reference from median lines and whatnot really help us do that because you're trading around the edges of the market. The whole point is trying to identify where the market's going to make a decision, right? And ideally, it's going to go quickly off of that level. So if I draw in, where's that little paintbrush tool? Hold on here. There we go. All right, so a couple things I'm looking for here. Again, one, I'd love the 118 tag, right? I'm looking to short up there again, or short more anyway. But let's just forget about that right now. Here's what we're looking at. So let's say you get down to the median line. Okay. Oftentimes you'll get a bounce from the median line. Okay, so we get a bounce. Where you're looking for is resistance from where resistance was prior on the same angle. In this case, that would be this level here, right? Because that's where you came from. Really, we would probably want to move this down a little bit, right? Something like that. Okay, so that's where we'd be looking for, and that would probably be about 118. If you don't get a bounce, okay, let's just say you slice right through this thing, okay? What you're looking for at that point, because it's really hard to chase extreme weakness or strength, right? We've all been there. Oftentimes it's that you're like, oh, it's a big breakout, breakdown, whatever, and this thing's really going to go. But at that point, what are you doing? Like giving yourself like a 400 pip stop? Like, probably not the best idea in the world. And then you have to sit there and miss out, and it just sucks. So this offers us a chance to get into that market. Oftentimes you'll get something like this. Market will pull back into the median line, right? And that way you can establish your position. So this is called a zoom and retest trade. The market will zoom down through the center line, come back and test it, and then go on our merry way. Great example of this just happened about a month and a half ago in the Australian dollar. This was it, okay? In fact, everything I just described could apply to the Australian dollar. So we came down, we tested the center line, we bounced to where we came from, which was on this parallel. We dropped, we tanked. At this point, you're like, oh, darn, I missed the trade. I'm not involved anymore. You should be involved in the trade anyway, but if you miss the trade, you're chasing here and you're freaking out. Rather than doing that, wait for the market to come back to the center line, which it did. Actually did it twice. Boom and boom. So you see that beautiful example of something I just described on Euro. All right. So all that said, I think that we just talked about 118 and 116 being the levels in Euro. I just went on this rant and educational piece about median lines, where all you really probably care about right now is where is Euro, and that's 118 and 116. Those are the levels I'm paying attention to. Okay, British pounds. another beautiful median line structure here. We got bearish back here, got some shorts on, and at this point, I see nothing to do other than just wait for this to unfold. And that's really about it. So yeah, we are looking lower in cable because we have this absolutely wonderful bearish structure. You can see that we hit the median line perfectly. We bounced, we rallied, we hit the upper parallel twice, right here and right here. That was like a week ago, and now we are headed lower. So on a very, very short-term basis, if we do get a bit more of a dollar pullback, the level to watch for resistance is going to be 139. 130. Let's call it 139.04 if we want. That is, again, here we are using a concept of daily reversal resistance against the high day and the close, right? That's what we're looking for. Levels that we could bounce at. You could bounce off of this parallel here. You can see how this parallel crosses lows, lows, highs, highs, low, right? And that's going to be, let's call it 37.70 or so. Again, I'm getting pretty short term here, but that's all right. 37.70. I'm looking to take some off. 37.35 or so. You can see that low here. It's also the 618 of that move. So there's cable. All right. Aussie dollar. Of course, after yesterday's bounce, we are essentially retraced that whole thing. Here's what I wrote in yesterday's piece on Aussie. Aussie's a hot mess. Price remains capped by the massive 74.15, but the wedge is morphing. What I meant by that was if I go to a 4-hour chart, so we had this wedge, right? Connect the highs. We broke down. It's about to go. Kick back in the wedge. It's just a mess, right? That's what I mean by morphing. Okay, it said I'm not interested in Aussie until price either breaks above 74.15. And you can see 74.15. Why is that so big? Well, it's important. Clearly, you've got September high back there. You can see it was consolidation when we took off. You've got two equal legs down, 74.15. You've got actually the 23.6 retrace of the entire move up from March 2020 is 74.15. Support here, resistance here a couple times. So yeah, 74.15 is important. Hold on, let me check on something here. Aussie and Kiwi are both getting smoked. It's good. All right. All right. So yeah, another thing about trading if-then statements, right? So Aussie, we're either going to break above 74.15, in which case I would think that the market probably heads back towards 75. Why? Because you've got former lows there, right? Big low here, April low. And again, it's that center line, which was support and resistance a number of times, and with precision, I might add. However, given this action right here, you've got to think that we're going to try to break down, right? So either have on some shorts, wait for the big break, or wait for the break and then short. or wait for it to break above this and try to play that, right? That's where my head's at. Longer term, the big level on the downside for me is probably going to be something on the order of $70.50 or so, and you can see why here. That's the high back from, what is that, January 2020, and then just look at all that, just beautiful action. June 2020, September 2020, October 2020, November 2020. It's also the 38.2 retrace of the rally from that that low. Here's a little trick, by the way. A little trick here is, like I said, a lot of people don't know or follow the 23.6 retrace. It's the first fib. Well, I guess it's not really the first fib. I guess there's really the first fib I follow, but you could, there's a 14.6 retrace. It's in the sequence, believe me, but 38.2 and 61.8 are the ones that most people follow. If you put up the 23.6 fib, it'll give you a clue maybe. I think it helps whether or not the market will respond to the 38.2 fib, right? Basically it's saying, is that market in sync with that Fibonacci sequence, with those Fibonacci measurements? It tells you basically, are you measuring from the correct high and low, right? Well, in this case, the market clearly is in sync with the 23.6 because it's the same level as the highs and lows here, just as a 38.2 is the same level as the highs and lows here. So my guess would be that it will respond. Okay. All right. So that's where we're headed, in my opinion. All righty. Moving on. Kiwi. Channel, and here's more symmetry, examples of symmetry. You've got lows here on the 75 line, and again, that the implication was that we would be tagging the 25 line, and indeed we tagged that 25 line and turned down. So the big level to pay attention to is the center line here at 69.50. Ultimately, there's more of a zone to pay attention to in Kiwi. Okay, you've got the December 31st high here from 2019. You've got this resistance from last September. You've got two equal legs down from up here. You've got the 38.2 of the whole move up. And all of those things are going to be between 67.50 and 68, let's call it. Okay. So with that, that zone right there, okay, is again what I call a magnet zone. So you've got a pretty good, you know, cluster of levels there, and that's where I'm looking towards in Kiwi dollar. Question is, do we stay under 71? 71's obviously a big level, so you know, as we trade into 71, that's where I favor kind of putting on shorts. Now, if I were to bring up here's a chart. This is a futures chart. I've got all kinds of stuff on here, but one of the things I follow is hourly volume spikes. So here's a volume spike that happened yesterday, right? The hour of the inflation data that came out, and for me, those are points of reference, right? You hear me say points of reference a lot. So point of reference, the market spiked into it, you know, and we have come right off. So really, you could trade against this level because I kind of look at being bullish above the volume spike and bearish below the volume spike. You know, it's kind of you know, a useful, just objective level that I'll pay attention to, if that helps at all. Okay. Dollar CAD. So first, dollar CAD. Here's a daily. We hit the 200-day average here and kind of resisted on it, right? I kind of like dollar CAD lower, actually. I don't. That goes against, completely goes against Aussie and Kiwi, but just looking at the trade, the setup for what it is, the setup, so be it. That's where my head's at. And you can see we traded up into this underside of this line. You've kind of got a nice resistance zone here, right, with these highs here and highs here. And I'm looking lower towards the 618 retrace of the rally from the low. It's also this trend line here that goes back to January. So January high, April high, and July 14th low. And that's going to be intersect around 23.13. So that's where my thinking is in terms of dollar CAD, right? I wrote about this, I guess, 2 days ago. They said, what, you know, they're like, why would you possibly be bullish CAD and bearish Aussie? I said, well, setup's a setup. And also look at Aussie CAD itself. It's in a down channel. It's under this level. It could like fall off a cliff here, and we right from that 50-day average too. So I don't know. I guess you could trade Aussie CAD if you wanted. The way I do it is I like to trade, for the most part, I trade just the majors. It kind of allows me more flexibility to go in and out of the legs of the cross. And if I find myself in a non-dollar cross, so be it, right? All right. Dollar yen, real simple here. We went through the high here from July, pull back. I'm thinking we pull back. I'm looking for us to pull back into the top line of this blue, or into the top side of this blue line. 109.50.70, let's call it that, okay? And that's it. Okay, I'm getting some questions here. I will look at those in a sec because a lot of these are going to be answered as I go through gold and silver, I believe. All right. Gold and silver. So we had Sunday night, the big drop. And then we get all the people talking about the big sell order that hit on Sunday night during conditions. So be it, blah, blah, blah. Bottom line is the market went down, okay? Big sell order or not. Yes, there was a big sell order. Every time the market goes down, there's big sell orders, okay? When the market goes up a lot, there's big buy orders too. So I don't really care as to, you know, who put the sell order in or why it was during a Sunday market or whatever, but it happened, and the market's respecting some pretty big levels. So it's, you know, obvious for all to see that this level is important, and we bounced from it, right? Look at the lows. Look at the lows. Look at the highs. I mean, literally this level, 1680, give or take, has been pretty darn big for like over a year and a half. And we bounced, and I noted in my updates here that 1765 or so seems to be a pretty good level to watch for resistance. We didn't quite get there overnight. We got set 1658. I'll explain in a second exactly what I'm looking for in order to do something in gold and silver from here. But let's look at silver first. Okay, so here's silver. We actually got bearish silver literally right here, and it was a beaut. So you can see the underside of the trend line, 200-day average. I mean, you could not draw a better setup than we had here. We were writing about this, and just so you know that I'm not Monday morning quarterbacking this, I will show you. I do this because you get a lot of people on social media and Twitter and stuff saying like that they made like $1 million in the last 10 seconds. And we know that's, you know, people see this stuff and they believe it, and it's not true. Okay, so this is from August 4th. Okay, and you can see that that was the setup then, right? Okay, so that was the setup, and it was right there. Okay, and this happened afterwards. Okay, so what now? All right, so let's go back. By the way, we bounced at the median line, right? Big conspiracy sell order or not? Guess where the market bounced from? All right, so this is actually a great time to talk about this. All right, so let's go back to 4-hour charts. All right, so remember March of 2020? And I'm just pulling this out simply because it's, you know, somewhat similar in terms of kind of the panic decline. This, to be sure, this was much more of a event during, it was thin conditions. I mean, it's a Sunday night, okay? The fact of the matter is we did bounce from levels that we should have bounced at, and we did. So that is that. But in terms of what silver and gold look like when they make bigger turns, right? You tend to have a non-confirmation, right? What I mean by that is, let's say gold goes to a no. Excuse me. Let's say gold goes to a new low, and silver doesn't. That's a non-confirmation. Let's say that silver goes to a new low and gold doesn't. That's a non-confirmation, right? You can see that with related assets all the time. It's kind of like a Dow theory tenet, right? It happens with Aussie and Kiwi. It happens with Euro and Swiss, or Euro and SEC. Is really more like what I like to follow now. It happens with you know, the S&P and NASDAQ, or small caps and S&P, what have you. So this is what I'm looking at here. So honestly, it's better to look at it on a line chart, especially given the thin conditions we had Sunday night, because those lows, like, you know, were maybe a little overstated, right? Like how, I don't know if we're going to retest the actual wick end of the bar. We might just be testing the close like we're doing right now. All right, so here back in March 2020, gold did not make a new low, silver did. Okay, so that's happening right now on the closing base. So silver is making a new low, and gold is not. This is exactly what I'm looking for, right? So let's wait for maybe an hourly close or a 4-hour close or something. But basically, yeah, this is what you want to look for in order to get a bullish signal. So, I'll go back and check, and what will determine if I buy or don't buy. I'll be looking at volume signals and whatnot. In gold and silver, like you're already bouncing actually. So like we had a 4-hour gold buy signal on actually gold here. You can see I had one right here. That was 2 days ago. So I'll be looking at short-term signals for gold and silver. Like I'll want to see if I get a buy signal on after this hour is closed. And I'm actually following SLV here. So the hour just started. We have 50 more minutes in this hour. If we really want to front run it, maybe I'll look at a 30-minute signal. But yeah, I'm on the hunt for a possible buy here in silver and or gold. Okay. And why? Again, because we hit big supports on that spike on Sunday night. Now, again, I'm looking for a buy signal for a trade. I do think that silver and gold could head a lot lower in the coming, let's call it weeks, months, I don't know. I think that you've got resistance in silver probably at 25.05. You can see the red line that crosses these lows. Hourly chart, look at that. Crosses these lows. Consolidation, Sunday open, puke. Let's go back to that. It'd be great. So this is the hourly close, which is presumably a very large volume level. That's why we're bouncing from it right now. So let's see what happens. But yeah, big spot. Alrighty then. Copper. Oh God, that's beautiful. Stuff is just unbelievable. So this is where we were looking for copper resistance. And lo and behold, we got copper resistance. So again, so this is the August 10th update. Okay, copper futures, right? Again, median line analysis, some concept of symmetry. Copper bounced off the center line of the channel from the May high on Monday. The center line validates the channel, right? Validate. Further, the 25 line was recently resistance. Arrow. The line intersects the 7.6 high at 440.25, which is now proposed resistance. Bottom line, evidence suggests that copper is in a downtrend. Guess what we just did? We just hit that level. Guess what we just did? We just dropped from that level. So this is a great example of using median line analysis in your trading, okay? So yeah, I am bearish copper right here. So that's a beauty. Basically, you look forward to trading these levels. And again, if you're trading it, right, this is where you're trading it. This is where you're taking some off. If you break that, you're more bearish, and then that becomes resistance, especially since it was just support. Okay. What about crude oil? Similar. Again, symmetry. Bounce here, 75 line, look for a 25 line of resistance. We could poke a little bit higher in crude oil before we go down again. So look for resistance at 70.18. All right. Indices, summer lull, literally not much to talk about here. The Nikkei is actually pretty interesting. So here's the Nikkei 225. So here's that. This is a big horizontal level here, 28,300. Former support became resistance, and we've turned down pretty hard from that today. So, yeah, I don't know. Looking lower. I'm not sure if this says anything about yen crosses or not, but typically a declining Nikkei would be in line with yen crosses on the downside. So like here's pound yen, for example. Resistance might be a little higher, right? Trend line is a wee bit higher. That's one to watch if that's your thing. Yen crosses. Aussie yen. A lot like Aussie dollar, right? I don't really care until we either get up to resistance or break down through support. Kiwi yen. I got stopped out of this one yesterday. Middle of nowhere for me here. CAD yen. It's at resistance. But again, I like dollar CAD actually on the downside, so not too interested in that. Like I guess technically I am short Aussie yen right now because I'm short some Aussie and some yen. But like if I were just looking at this chart itself, I'm cool with that, but like I wouldn't be doing anything here necessarily. All right. There was a question here. FX Rushy says, Jamie, pound CAD, please. Okay, so if you have a question, I'd be happy to answer it. About pound CAD. Do you have a specific question on pound CAD? Is there because that pound CAD, if you just say a pair or a market, could go many different ways. I'm not sure which, like which time frame you're looking at or whatnot. I will kind of see if I have an opinion here. It doesn't look like I have much to say. Pound CAD, certainly pay attention to it. Certainly coiled, right? I mean, this is back to 2018, and it's a very well-defined line. I mean, it hits 3 levels, and I would pay a lot of attention to, let's call that, 178 or so. If that gets taken out, then you've got a massive base to work higher from. Until then, I don't have a whole lot to offer on pound CAD. Bitcoin, it says day. Sure. Again, do you have a specific question on Bitcoin, right? Or when we have, with these webinars, it really helps to get context on what it is you guys are looking at. FX Rust is trying to establish trend continuation on bull side. Okay. So just pay attention to the trend line here then. Okay. As long as you're holding above the line off of the lows, then I would be, constructive, right? I would say that 170 and 150 level looks rather important. kind of see here the lows from April, resistance, support. So 71.50 looks key. Okay, how about Bitcoin? Man, this is some big resistance. So 200-day average and the underside of this line here, which you can see goes back to March 2020, right? March 2020, big level. It's like when everything bottomed. You can see that this is well defined. It was former support. We've run into it now. We've also got the low here from April 25th. So we've also got a pretty clean Elliott look. 1, 2, 3, 4, 5. 3 up, 3 up, 3 up, something like that. I think, you know, everyone's looking for the next big trend, big move in Bitcoin. And to be sure, these moves are big in the ranges as well. So don't let that fool you. But yeah, we were probably in a period of range trade, I would think, in Bitcoin. I mean, we went from, you know, 4,000 to 60,000 in like, I mean, really, that was from March until really February. So 11 months. Yeah. So that was 11 months where the market went from, 4,000 to 60,000, almost 65,000. And I would expect that we spend, you know, markets don't trend all the time, right? Even during this massive run, you had periods of huge consolidation, right? So I would expect that we have a period of huge consolidation in Bitcoin, and that's going to involve a lot of weakness, right, within that consolidation. So here's a simple chart as well that I think a lot of people forget. So when you have these initial like absolute tank jobs off highs like we did here back in 2013, the market came back, right, to the 200-day average, and that's where it failed. Okay, let's look at this too. Back in 2017, huge drop. The market came back close to 38.2, by the way. That's why I have the measurements there, right? 38.2, you can see a little red. 38.2 also came back to the 200-day average. Okay, we had this. The market came back close to 38.2, and here we are at the 200-day average. So I don't know. Kind of thinking that we're in, at best, you know, a range. At worst, you know, maybe we go down to 20,000. I don't know, former high. And if we apply our concept of symmetry to median line analysis here, then we should expect a drop to 20,000 actually. So again, resistance on the 75 line. What's the point of balance with which we would test, you know, that and exhibit symmetry around median line would be the 25 line, which intersects with the former high near 20,000. So I still think that we have a good shot at testing 20,000. You know, look, how do you trade this? How do you short this? I don't know. I think there are some places that have options on Bitcoin prices, so that could be a way to play it, actually. Also, I know Scandinavian Capital Markets is going to have has Bitcoin trading on MT4. It's coming out soon, so I'd give it a shot. Check it out directly to MT4 at Scandinavian Capital Markets. Though 15 pairs of crypto will be on there. And it'll be on C-Trader after that. So check it out, ScandinavianMarkets.com. Again, ScandinavianMarkets.com. And other than that, I am done. I've gone through everything that I had to go through today. Let's see what's going on in the markets right now. Dollar's strong. CAD's strong. CAD's holding its own. There you go. That's what I'm talking about. Where's the Turkish Lira? Turkish Lira is holding its own too. This is actually one that I forgot to look at. Turkish Lira, dollar Turkish Lira. So this is an interesting setup. So yesterday I wrote about this too. I said, essentially, this is a 2021 trend line, and you know, for 1, 2, 3, 4 days we've been trading around it, and then yesterday's action, he spiked above everything. You know, last 2 bars closed, you know, towards the lower end of the range. That's a bearish setup to me. And sure enough, we've actually followed through the downside today. So I don't know. Turkish Lira, dollar Turkish Lira is an interesting setup on the short side, actually, but I would not risk anything above that, just above that high. Okay. Maxim says, is S&P still grinding higher? I suppose, man. I mean, like, look, in terms of when it comes to the U.S. equity indices, I mean, there's not much to do here. You know, if you're trading individual equities, sure, go for it. But like, I mean, this has been a period of absolute nothingness for like, I mean, really for 3 weeks. I mean, it's just summer market, right? If you're following U.S. indices, follow the NASDAQ. Again, if we do get maybe one big burst to the upside, a couple days of big upside where you actually have the VIX rising along with a rising market, that could be interesting for a you know, a contrarian sell or something. Oh, excuse me, I need more coffee. In which case you're going to be, you would follow the channel here. Okay. This is a channel back to, what was that, September of last year of 2020. So that could be an interesting spot to set up for. And again, you know, the time of year is interesting too, because we're coming up September, right, in a couple of weeks here. And September is historically actually the worst month of the year. So if you're looking at this from a, you know, just a pure setup, opportunistic setup, you know, I'd love to get, again, a couple days of euphoria, of real, you know, get away from the grind and just get a big burst higher, right? Test this line up here, and that would set you up for maybe the seasonal bearish point into, you know, September. And everyone talks about crashes in October, and yes, October has a history of crashes, to be sure, but keep in mind that the market tends to bottom in October, crash or not, right? The strongest 6 months of the year start in October. So you want to go into September kind of looking for a, you know, a sell setup, in my opinion, especially where we are. Look for that resistance up here in the NASDAQ, draw this channel in your chart, and then you know, have it set up with the mentality of, if you do get weakness into September, look for a low in October. Yeah, this line here is like 15,385 now. Again, this is going to increase every day, right? So just if you draw this on your chart, you'll be able to see it where it is. So yeah. All right. So again, now I think I've really covered everything. So that's it for me. Again, Jamie Saettele here, signing off. Jamie Saettele with Scandinavian Capital Markets and SB Trade Desk. Do not forget, by the way, to check ScandinavianCapitalMarkets.com, because we are adding crypto 15 pairs to the MT4 platform, and they'll be on the MT4 platform first, and then they will be on CTrader as well. Okay. All right. So again, that's it. Jamie Saettele here signing off. Have a great rest of your week, and I'll talk to you if we do next week's webinar, because I'm going to be out of town next Thursday, but we might have to reschedule it for like Wednesday or something. So keep abreast of the updates on Twitter and on all that stuff, and I'll let you know when that webinar is going to take place.